everybody. Welcome to the Trading Market Technicals morning call video for Thursday, June 28th. And yesterday we had another up day, a small grind higher, following the two previous consolidation days. Actually, both of them were up small. Now we're testing sort of resistance in the S&P. I'll get into that in the charts. But nonetheless, we did have an up day. We had a small gap up, a little bit of a back test, and then we grinded higher all day, again, on no volume. So as a bear or a short guy, you'd want to see something like that. And if you're a bull, or you'd like to be long and stay long, that's not what you want to see. So clearly, I think this market is ready for another move. I think the next big move will be lower. I've been mentioning that. This week, we had the help of window dressing, end of the quarter, end of the month. A lot of mutual funds, they readjust their positions, they realign themselves for the new quarter. And also, believe it or not, they prop up and keep their positions up as much as they can so they can mark up their portfolios for their investors. So that's the phenomenon at the end of the month, and it does hold true. It's every quarter, and like I mentioned on Monday, look for a move higher before the next move lower. Now, and we're going to probably see that choppiness, slow grind higher for maybe another week or so. We're getting into a holiday week next week. Canada also has a big week off. They have Canada Day. It's like our July 4th. And what that's going to happen is create lighter volume again. All the big players gone, not willing to push some stocks down. Now, don't forget, if there is something that does come out, the moves can be extreme. So just take note of that if you're trading during the day. We had a good, decent numbers yesterday. Nasdaq actually lagged. Small caps actually led, so that's really a good sign of kind of a risk-on type thing. Housing did well. We had some housing data. They did okay. Commodities, coal, oil, gas, metals, and aluminum did really well. A lot of the consumer-related groups, retail, restaurants, auto travel, they did terrible yesterday. And that's really what happens when you have risk-on environment. And that's what we had yesterday. But, again, clearly no volume to indicate to me that, hey, we're going to be looking to test the highs. I don't think that's going to happen. We have been in the 35-point range for the last couple of weeks. We tested lows Monday and Tuesday, and now we're actually testing resistance. So that's something that we want to keep an eye on. We're range bound on light volume. That means it's very difficult for the newer traders to comprehend that and really kind of trade that, because you need to really be precise, and you have to have no bias saying, okay, price action is rolling lower, I'm going to look to short. Price action is actually moving higher, I'm going to look to reverse and get long. So just a little tidbit for that. Energy did well. Again, I mentioned that. One of my trades was USO. I like the USO. And we did have a bounce, but again, it is a weak bounce, so it's nothing crazy. I think it needs to carve itself out a little bit more on bottom before you really maybe take on some calls or take a position to the upside here. I don't think that's going to happen anytime soon. But I like the price action in USO, the XLE, last couple of days. So again, we're going to be keeping an eye on some of these beaten down, battered stocks and sectors. Again, the coal sector. Everybody hates it. I love to hate. I love to love stocks and sectors that everybody hates, because you got one side. Everybody's on one side of the boat. What happens? The boat tips over. So I'm looking at going forward in the next few weeks, few months, to look to maybe start building positions in this. And again, that's only if the market starts to get a little more healthier here. I don't like this market at all. I've been saying it. But that doesn't mean we can't trade to the long side. A couple of nice small day trades. We don't have to be that active. And even some shorts. Market gets really crazy, gets overextended. Why not? We look for a short. We have two big event risks today. We have Supreme Court expected to rule on the Obama health care reform plan. So that's going to be something interesting sometime today. And I think they're reporting around 10:30. We also have the EU summit. I don't think anything good comes out of that. It's just a waste of time. A bunch of people, gathering together and talking what if. I think that's totally a waste of time. We also, as you know, have Thursday. It's all continuing jobless claims, so keep an eye on that. We also have GDP first quarter reading annualized, and we also have core PCI. That's also a market mover as well. So we do have some stuff coming out. And what I want to get into is the charts. I want to show you This is the E-mini right now trading. We're about about 4:45 a.m. And as you see, we were consolidating all night, overnight here. And sure enough, Germany came out with some of their econ data, and look what happened. We just sold off really hard. Now we're down 7. We were down 9.25. So if this isn't a worldwide market, I've never seen anything so correlated before. We get a hiccup in Germany or one out in the Eurozone, we definitely get the we definitely follow with a big hiccup or a fever, so to speak. So this is not good. As you can see here, numbers are coming out. Until the numbers that are viewed, oh, we know about it, and they start rallying on bad numbers, that's when you want to take a look at getting really long. But as of right now, I think there's a lot of market participants that are on edge, and this is not good. Now we're at down 7. I think we'll probably bounce a little bit. We do have some numbers coming out of the Eurozone again, out of Europe, so that could actually be skewed, and maybe we can roll back up a little bit. But if we stay below this area, I'm going to be looking at short today. If not, and we can get back above certain, this is the main pivot, by the way, and we get above main pivot, then maybe be looking to buy some dips, but not until then. But this is not good. This is not what you want to see in a healthy market, if it is a healthy market. I don't think it is. All right, let's get let's run right into the charts here. Oh, but before I go into the charts, I wanted to mention one of the reasons why I see longer term negative, and I did mention it before. We have a lot of longer term charts, which I'm not going to bring up here because I'm trying to keep this down to like 10, 12 minutes. Is the longer term charts are showing bearish patterns, rising wedges, head and shoulders, and I mentioned that during the beginning of the week. If you look at the monthly S&P chart, the weighted index, a big monthly chart, I'm going to show that to you at the end of this, end of the indicators. You're going to see that the breadth has been failing, and that is not good at all. And if you look at this, and you can see how our internals are not showing where this market is in the S&P high 1300s, the breadth is not telling us that. Then you have your worldwide indices showing that we're reversing, and they're holding this market up, meaning the Fed. This is something that eventually is not going to be sustainable, and this market will collapse without the Fed. So I think the Fed is totally committed, and that's why I said don't fight the Fed. So we don't want to just assume that the market's going to sell off here. Okay, we want to make sure we have our triggers. If the market breaks key support levels, then we're looking to get short, and then I think we can ride it down for 20, 30 handles before the Fed starts intervening and manipulating the markets here. Okay, so just keep an eye on that. That's one of the reasons why I'm longer-term negative. Now, they have not triggered these bearish patterns. So if they don't trigger, you have to trade what you see. Okay, let's not anticipate something, and then nothing happens, and then now you're holding a real bad trade. Okay, all right. So anyway, getting back to the indicators, our trusting McClellan oscillator, overbought, oversold reading, and again, we were neutral, and now we're going into this overbought territory again. So this is something I want to take a look at, and I'm going to keep an eye on. Now, if we were to rally today into tomorrow, and rally hard back in here, I would be looking for an absolute short opportunity into the next day. Okay, so that's something that we want to keep an eye on, and if you don't follow the NYMO, I would definitely follow the NYMO. Real key barometer here. Okay, let's take a look at the stocks above the 50-day moving average, and we started hooking up here. Still, again, unwinding from its overbought territory, so not much really here to tell you. So something over here, I'm not really much to say. But I like to keep looking at this area. Now, we have our bullish percent index, and we do have our momentum moving average, which would be the 8, starting to catch up in this area here. So let's see if this could hook back up. If we do have a down day tomorrow and then a good up day tomorrow and followed Monday and Tuesday going into next week, and if we get to clear this little area out. Now, this indicator just acts like as a moving average. It's basically a line chart. So if we can get back above this little area and start hooking up along with the moving average, then I think you have some momentum, at least to the upside for now. Let's take a look at our bar chart indicator. This is a momentum index indicator for the day. Now, we're already at 101. So I was looking at this yesterday saying, okay, you know what? We might actually start reversing today because we are in overbought territory. Anything over 101 is overbought. Anything below 98 is oversold. So I was looking already for something possibly that we might get short here in relation to the bar chart indicator. Okay, another big one, the U.S. dollar. Dollar strength, market weakness, bottom line, right? Dollar goes higher, euro down, equities down, commodities lower. I mean, that's the bottom line here. This was a chart from last week. Want to show you where we are today, and now this morning we're up we're much higher than that. So it's either going to be a double top of this bear flag and then fail miserably, and then the market rallies, or they take the bear flag out and we rally to new highs. Now don't forget, we're not even overbought yet in our RSI here, 14. All right, this is a daily chart, end of day. So we have plenty of room to run to test these highs. So let's just keep an eye on that. Make sure you're aware of it if you're trading commodities, especially commodities, okay? Speaking of commodities, let's look at that bullish percent ENER. This is a very trusty indicator to help me when I'm looking at some longs and shorts for a special sector. This is the bullish percent energy, and I have the 3-time ERX up in here, and then of course I have our MACDs, RSI, and stochastics below. Now, as you can see here, you see how this is lagging? This is why I said be careful with the, if you're looking for a day trade in USO or some of these energy names, fine. But I wouldn't get too overly optimistic about this. I would like to see this, again, take this area out 30, start to really roll up, and then I would say, hey, for a trade, I'd hold on to it for a few days. Okay, that is not what you want to see. This is lagging. And then I want to show you this. This is really, really fun, but this is important. This is the monthly S&P equally weighted index. This is a monthly chart now, guys. This is a much longer term than when we trade. But I like to see where things are going. Look what happened here. 2008, 2009. Doesn't this look the same? Double top here. Boom, waterfall sell-off. Double top. I would really be cautious. Some of the longer term investors that follow me, I wouldn't say now, but I'd start looking to hedge your long portfolio. Maybe buy some puts, sell some calls. Against the longs, if you do want to ride this out, if it does happen. Now, again, I'm not saying that we're going to crash. Please don't get that information. But I'm saying that what I'm seeing internally does not look good. Does not look good. So I do think we rally at the end of the year, but in a longer-term picture, if this doesn't start hooking back up and some of these internals getting a little bit better, I'm afraid that we're going to probably test some of these lows, 1280, 1260 in the S&P. So something really that the longer-term investors need to keep an eye on, okay? All right, let's funnel into the charts. S&P, 5-minute, look what happens. 2-day consolidation, really, small drift higher. Here's the 2-day consolidation. Gap up, little flag on a bull test, and then one rally. We had one really decent rally and then a small one into lunch, and then we just kind of faded the rest of the day. So if you're trading intraday, you should be taking your cue from the spiders or the S&P, whatever your proxy is you like looking at. If this isn't really telling you much, there's no sense trading. Maybe a couple of trades during the day, try to put some money in the bank. Other than that, I wouldn't. I'd be not looking. This is definitely telling me not to be really aggressive here. Spider daily. Okay, we did hold the 20. We're back above it now. Here's a good positive. If we continue to grind above the 20-day moving average, and we keep chopping around in here, and then we break out, then I'd say, hey, we got a shot for the highs. Okay, and that's a good sign if we could stay above it. But clearly, with what I showed you this morning, we're going to be back in this area here, and it needs to hold. This is not what you want to see, as you know. I'm a big volume follower. I like to follow volume. This is not good at all. We are unwinding from our overbought rally up in here. As you can see, we rallied up in this area, and then now we're unwinding, which is a good thing. MACDs are starting to cross over. So this could either be one or two things, that continued selling. If the MACD, usually when you have this line coming across, we like to see this hook up. And this is going to be a do-or-die situation here, I think, for the S&P for the next trend. Okay, so we want to keep an eye on that 20-day on the daily chart. And this is what's really disturbing, and that's the transportation sector. Now, the transportation sector is our leader, right, out of the 5 indices we follow. And look at this. This thing cannot even get above the 20-day moving average, where the other indices are. Very, very bad. This is not what I want to see, being a bull and wanted this market to go higher. So I'd be following this transportation sector real closely. Qs, again, remember I mentioned this morning, didn't have a bad day, but volume really muted, nothing really. You can see below average if you follow. Take your eye all the way to the left of the chart. We're way below average here on the Qs. So didn't have a bad day. Dow Jones actually had a pretty decent day, but look at this again, no volume. So this is critical, guys, what we want to see here, okay? moving forward. All right, guys, a little bit longer than usual, but I wanted to get my point out in the beginning. Watch today. Today might be a critical down day if we don't recover this morning. We do have jobless claims, so really anything can happen. And as you can see, we're totally moving on news. Everything is trumped here, so be really cautious. Be careful trading. Let's get this uncertainty out of the way, and then we can really dig down deep and get a lot of trades going. I'm just cautiously optimistic right now. I look at the patterns, but below 13, let's say 1320 and then 1300. Let's give it some buffer here. As you know, we've been trading between 1300 and 1335. We take that 1300 low out. I think you're going to see a quick sell to the 1280 and then the 1260 area, and then reevaluate. Okay, but as of right now, let's see what happens with the initial jobless claims, and we have a couple event risks happening for this morning. All right, have a great day, and we'll talk to you tomorrow. Take care, everybody.